What's up, guys? We're going to talk about the E-mini. It's September 25th, 2023. We had a bullish range today. We're going to talk about yesterday's price action, the market cycle, the first 6 bars, buyers and sellers, and the patterns that made us money today. Yesterday was a bear channel. We talked about how it was like a broad bear channel and both sides were making money. It went from just bears making money to that was FOMC day, to bulls making a little bit of money, to bulls didn't make money today. I mean, on yesterday, on 9/22, bulls didn't make money. And then look at today. It's expanding. Do you see how the bears are getting, the market's becoming more and more 50. Even today had a higher low. So that's that's bullish. It went from only bears making money to bulls and bears making money. This is just like a rough range. That's interesting. So we have a big gap down, and that gets bought up pretty quick here. So that's something to keep in mind, because look, yesterday we had a huge string of bull bars and then a huge sell. So the market could be seeing this as a range bound environment, which is why bears would be taking profits at lows rather than shorting, because everyone and their moms can see that bulls made money. So the market's range bound. It's going more and more 50-50. Today was a little bit more bullish. Where we are in the market cycle, the 1 hour time frame, and we're at the bottom of our range on the 1 hour time frame. We had this breakout, which looked like the points lined up. We had the breakout to sell, and it sold for a few days. Let's see if they got, you see one more measurement here. So yeah, we sold. We're in the range. We had a huge up move and then a huge down move. So we're in a range. And if we pull back, squeeze the charts a little bit, there is some more room to the downside. We can see this gap right here. I'm gonna delete this. This is the 1 hour time frame. We kind of have like a head and shoulders. That could be a reversal pattern for the bears. But at the same time, the bulls have a bull flag. Double bottom, double bottom, double bottom. So, it'll be interesting to see what happens. This is clearly the high, and this is clearly the low. You guys can see how, this is why the markets are always 50-50, because if you're looking from the top down, it's bearish. If you're looking from the bottom up, it's bullish, depending on kind of how you're looking. Even if we zoom in, it's fractal. Look, this zoomed in is a bull flag at lows. That's what we got today. Pull back. That's a bull flag. Oh. That's a bull flag at lows. But this, I'm going to delete that, is a bear flag. Say something like that. And then here's like the lower highs. And that's clear lower highs. You can't even argue for a double top. See? So in the market cycle, overall, the market could be in a range. Well, the market is in a range. We're at the bottom of this range. The bears will need another breakdown. The bears do have a gap, so that's good for them. That's the gap right now. That's strong. If we're in a range, bulls are going to come back and close this gap, and I think they're going to get over here if we're in a range. If not, bears definitely want to keep that open. Bears definitely want to keep that open. So yeah, higher time frame, we're range bound, which most 80% of the time we will be range bound anyways. We're at the lows of this overall. Let's see, what month was this? June lows. We're really close to June lows. Oh, did we tag June lows? That's right on the money. So bulls will definitely want to keep bulls want to keep this gap open. I should measure it the other way, the bullish way. Bulls want to keep this gap open. From here to here is a bull gap, 42 points. From here to here is a bear gap, 26 points. So that's interesting to see. We'll see who has more pressure, what happens at the markets at range lows, if we break down or we go back up into a range for the rest of the year. So that's the 1 hour time frame. And now we're going to do the first 6 bars, buyers or sellers and patterns. But today we're going to do it a little bit different. We're going to do it all on this page, and I'm going to have the days I'm going to have 6 bars play out, and then we're going to get through the day together. So the first 6 bars is we have a gap down. That's a bear bar. And we actually do get continuation. But look where we get continuation into. Profit taking, 20 points. That Bears made 20 points, so they want to take profits. That's a perfect 20-point gap down with continuation. So I can see how this could be a good trap for traders like myself, and maybe newer traders will see this as momentum and get short. And that's what I think caused this uptrend, is that Bears made the 20 points, and new traders are getting trapped. Weak bears are getting trapped. Strong bears are taking profits. Bulls, I don't know what weak bulls are doing, but strong bulls are buying range lows because they know bears are taking profits. And they close the gap fast. First 30 minutes a day, the gap gets closed. We have 1 bear bar and 5 bull bars, so clearly the market is more bullish than previously. We had a limit order market right here. See, limit order. Oh, right here, this box. And today is a trending open. That doesn't mean we're going to have a bull trend, because if we were going to have a bull trend, bulls do not want this gap. You guys see that gap? That means they're taking profits at the EMA. Bulls take profits at resistance. So the market is leaving little breadcrumbs for us to follow. So right now the EMA is resistance. That's the first 6 bars, bullish pressure. Play the next 6 bars out. Okay, this is a strong bull leg, and then a 2-legged pullback. 1, and it's a weak 2-legged pullback. Excuse me. 1, 2. This is a 2-legged pullback, about 6 bars, and a double top, a micro double top here. We have a micro double top, and we have a lower high. This is strong bear. Look at this wick right here. I'm going to delete this arrow. You guys see the 2 legs down. Look at this wick in this box. Do you guys see this wick? I don't know if it's hard to see. So this bar 12 has a big wick that comes down to here, and it tests bar 2's high. It's checking to see, do we have buyers or sellers on top of bar 2. This is a very strong bull bar at the low of a range, so it's not an exhaustion. And I think bulls want to keep this gap open. Let me try and make, so next 12 bars is a 2-legged pullback, double top, lower high. I did take that short at 10 because I thought it was a good candidate for a gap down double top, but I got trapped. Play. That's the next 7 bars. I meant to stop it at 18, but so now we have another leg, and we have a good range to work out of. The Bears have made about 20 points. See, do we remember the first 20 points? And then the Bulls have made about 20 points. So when the Bears make 20 points and the Bulls make 20 points, we are in a range. If one side wasn't making 20 points, that would be somewhat trendy. But since we had a gap down and we have this leg here, I don't think that helps the Bulls, because people can literally see that on their screen this far into the day. You know what I'm saying? I was looking at this on my screen. When I was looking at this was on my screen. So I was looking at it like this, you know? So that doesn't help the bull case here because everyone's looking at this. What does help the bull case is this, because this is just too strong. So we get another leg down. This makes 3 legs for the bears. 1, 2, and 3. But there's just too much buying going on within the bear legs. Okay, maybe bar 9 is a pullback, but this is strong. No continuation after 2 legs down. These are too strong. Look at this. No wicks. We have a little wick on top of bar 18 and then a clean bottom. This looks like it's going lower. I'm pretty sure I was short here. Around this area, I got trapped. So we don't know this is a trap yet, but what we do know is that this is a low. And look at that. It came 1 tick below and then came up. So sell orders, people put sell orders down. On bar 18, people put a sell order. It got filled on bar 19 because do you see that wick on bar 19? So it filled these people. These people got filled. Let me open this up. See this wick? This is telling you bar 18 sellers got filled on bar 19 and immediately got trapped. There was no hesitation. They got trapped for a bull scalp off the bat, so that is not good for them. 2 bars like this, to me, should be bang. You know, it just didn't happen for them. So I think there are more buyers here. I think there are people looking at bar 2 with their buy orders, waiting for a pop up to test the highs and make a new high. Bar 24, the next 6 bars. That's what happens here. Look. If you caught the weekend study session, we were talking about inside bars at resistance and support. This is an inside bar at resistance and support. And look what happened. The market surged up. Traders got trapped. Bears are trapped. Bulls are happy. They're buying. I bought this as a first pullback to a breakout because we break out here. And I bought this. This was a very strong 3 legs. Inside bar, reversal, pullback. And they get leg 2 immediately. There was no denying that everyone knew that was going to get fixed. Or right about there. You know, very close to leg 2. You pull, or actually, we do it from here to here. So, yeah, very close. It's not on the money. I'm sure if I measure this bar, yeah, if I measure that bar, they get there 1-to-1 like that. And then now look at this. We have I'm going to clean this up a little bit. Bar 23 is an inside bar at resistance. This is a 5 point. They're trying to get excuse me. They're trying to get to the 20 point mark, but they have an inside bar at resistance. I believe that's about 25 points. Woo. Your boy's getting good at counting. So, yeah, they get resistance around 25 points. Inside bar at 25 at resistance, and it sells. Are you guys starting to see a pattern here? The market follows inside bars at support, inside bars at resistance after a big move. It's giving you hints. I'm sure a lot of people got trapped here. And I think that's what caused bars 20 to 22. It doesn't matter. Just get out and reverse or get out and wait. Just get out. It doesn't matter what the market does. We are following, we're not predicting. I didn't mean to, okay, that's another tangent. I've been trying to keep track of how many tangents I go off on. They've been getting better. We're going to look at the next 6 bars. That'll take us to bar 30. Okay, that's 7. But the next 6 bars is another flag. Look, the market makes 1 leg down. Inside bar at resistance. Right here is the resistance because this 10-point mark was the gap close. So resistance turns support. Inside bar at support after a down leg. Leg 1, leg 1, leg 2, leg 3. On a small time frame. That's a wedge bull flag. I don't know what time frame, but that is a wedge bull flag like that. And it works. You make about 5 points here, and then we get another inside bar. So now we're getting inside bars, leg up, inside bar, leg down, inside bar. We had a big down, we had a big up. The market is confused because people have sell orders here, but then bulls have buy orders here. So this is the battle that's taking place because everyone's confused off these bars and these bars. Bulls lace it up, but bears have this laced up too. You see? Are you guys starting to see where the limit orders are at and where the fight's taking place? A big up, big down. This is the Al Brooks quote. Big up, big down equals big confusion because of all the limit orders. All the limit orders are here. All the buy limit orders are here. So it's just a battle of who's got more orders. So we have 1 push, 2 push, 3. I don't think bar 20 would count as a push, but if it is, this would be a wedge top with an inside bar here. Bar 28 would be the inside bar, and this would be a setup for a reversal. 3 pushes up, inside bar at resistance, and we sell. If you were going to take this sell, the first target would be the EMA. Because of this, I did not take this sell because this was huge. But if you were going to, you would have to target like bar 27 low if you're not using the EMA, or the EMA if you use the EMA. This is the breakout point, so you target the break. I said bar 28, I meant to say bar 27. If you're trying to go for a reversal, your first target is always the breakout points low, and then if that passes, if bears break the bar 27 low, they look for a measured move of this from here. It's up to you if you want to do wicks or not, but that's kind of like how to look for PTs. So that would be the bear's target. More sellers right now because we're in these bars range, so I suspect there are more sellers. I'm gonna speed it up a little bit. Okay, so now we're at midday, bar 43, and bulls get that third leg up. See, that's why I was saying be careful if you're going to sell here because this is just so strong. Look at that inside bar above the EMAs. Good buy. And they get there about 8 points, I think, with a market order, 7, 8, 10. 10 if you're a limit, 8 if you're a market, about 6 if you're a market order. And they sell. Bears finally put a leg in through the EMA. This is the first time, well, technically Bears made money here. It wasn't easy, but they did. So this was the first time in about 2 hours Bears are making money. This is not a big trend, but it is somewhat of a strong looking trend. It looks like it could be strong, but clearly it's not because Bears are making money. So we get down to the bar low, and the test passed. They get the test. Bears get the test. And one more thing, inside bar at resistance, what happened? Boom. This is good resistance. This is better resistance than this because that's 30 points. 10, 20, 30. 32. Now we can see bears have made money. So now I'm thinking, where can I get short? Bears will take profits at lows because look at these wicks. Bears are not convinced that they're going to go too far lower because if they were, bar 41 wouldn't look like that. It would have closed on its midpoint. So bar 41 is already signaling us that take profits. There are some hidden buyers somewhere. When I say hidden, I just mean we can't see them. I don't mean any like order flows or that kind of stuff. I just mean like we can't see them, but I think there's bullish pressure. Bang. Here. This is what I wanted to show you guys. After the bears finally make money, the bulls are not making higher highs. They do not make a higher high. It's just all lower lows after that. Lower highs, however you want to say it. So do you guys see how after one side made money, the market changed? Bulls are not making new highs. Bulls are making highs here, 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 new high, new high, new high. Third push up, third flags fail, and they can't make a new high. So everything's adding up that we're in a range, and it's time to sell highs, not buy lows. You can buy lows. I mean, look, I was buying lows. I didn't even catch this until after I was looking at the day. I was still buying lows and just kind of scalping around. But the bears are putting in more bearish market structure. We couldn't see this as a bull flag, a broad bull flag, a weird looking. Kind of like a triangle bull flag. It's just, that one's a bit hard to see. We can see it from here too. And then there comes a sell vacuum in a few bars. I want to talk about this movement right here. The market's giving up four times in a row for about 2 hours. Bulls could not make a new high. Look at this wick compared to all these wicks. All these wicks. Something's different. Wick, wick. Sure, we got wicks here, we got wicks here, we got wicks here. But these are big wicks. I don't think that's profit taking. I think that's bears shorting now. Because bears see the first time they made money. They see they made the second time. So now they lace it. You see what I'm saying? Now for the third time, they're like, hell no, they didn't make highs again. Lace, 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 lace. And look at all these wicks. That's showing you the market's trying to push up, it's getting sent down. Push up, sent down. Push up, sent down. So push up, grab sell orders, sent down. Push up, grab sell orders, sent down. This is a sell vacuum. I think the market wants to test one of these lows. It's looking for buyers. The market's looking to test one of these lows. Boom. Trap. The market's been ranging for about 3 hours now, more than half of the day. For about 4 hours, the market's been ranging. It's clear we're in a range. Everyone can see this. 80% of breakouts fail within a range. This is a breakdown, and that also 80% of these are going to fail. That's what happened. Failed breakout caused a surge. They were buying quickly. This is an inside-outside bar. There was no time to get. If you didn't buy this bar quickly, you pretty much missed the move. I think this was a challenging day to trade because of this and this. But if we keep the idea buy low, sell high, scalp out, and we play it safe, you guys will see my trades throughout the week. I mean, actually, we're not done with the day. There's still some more bars left. This just got very, limit order. I stopped trading around 12:30 PST. Like, how? Like, I'm sure yeah, someone could trade this for sure, but after this, you could just hold till close, but anything could happen. You're gonna hold a big position with this looking bar, this wick. I don't know. People are definitely, this is all algo trading towards the end of the day, so be careful. Scalp. I hope you guys are learning things. These videos are helping me think my thoughts during the training day. So I appreciate everyone coming here and leaving comments. You guys have been showing me a lot of love lately. Thank you. I hope you guys are learning price action. Study every day. Mark up your charts. Think about price action when you're sleeping. Dream about it when you're sleeping. Think about it when you're awake. Have a good day. I'll see you guys tomorrow.